How's it going, everyone? Hope everyone had a good weekend. We got January 6th here. It's a Sunday. And we're going to be talking about the S&P. We're going to be talking about some of the FANG stocks, so Netflix, Facebook, Apple, Amazon, those big guys. And I do want to touch base on a comment that someone left that is actually a really good question about Apple. And I think it'll help a lot of people out just by, taking a look at it. So, jumping into the S&P. So, the reason why a lot of people are starting to get excited is because technically we did change the trend on the daily time frame. Obviously, we have a lot more room to go if we want to see all-time highs, but a couple things to note real quick. And when I say change the trend on the daily time frame, of course, we have the low of the dump here. We came up for the bounce. So that's the low. That was just another lower high on the daily time frame. Then we consolidated for a few days, formed a higher low, and then pushed up past this previous lower high. So we now have a higher high on the daily time frame. A couple things that are standing out. Obviously, we have this the middle Bollinger Band, the 20-day simple moving average. That could act as resistance. We've talked about it before, and it would be nice to close above that and then continue trending upward. So I want to touch base on the comment that someone left. And so Mario's comment, he says, and this video is from a few days ago, last week, January 3rd, says, compare yesterday's Apple action to 1220. In both cases, nice tankage, nice momentum, negative momentum, end of day, really beaten up at the end of the day. However, yesterday's action is being followed up today by a nice bounce. Okay, it says, on the other hand, if you bought end of day 1220, you would have been screwed real hard. What's the difference in the chart? Anyway, you could have predicted these differences. So predicting, I'm not good at predicting. I just react to the technicals. So let's take a look at that. Let's take a look at Apple. 1220, where is 1220? I believe it's one of these red days. Oh, right here. Okay, so Mario's talking about 1220 right here. And he's saying, back then, end of day RSI was beaten up real bad. And then the end of day RSI on this day, January 3rd, was beaten up real bad as well. So we're going to look into, first of all, just right off the bat, Mario, if you're looking at Apple, this would have been a key level to hold. So this is on a daily downtrend. If you look, the downtrend, all that means is lower highs and lower lows. So, we come up, form these little highs, keep on coming down. Nice daily downtrend. We had a nice pop up here, but that didn't set a higher high on the daily time frame. That's just a lower high. So we keep on setting these lower highs and lower lows, and from a technical perspective, here's that 19. Here's 1220. Actually, on the 19th, I would have been very cautious because we broke a key level to hold, which was 163, which proved that was a lower low. And then we came up a little bit. It looks like we tested that lower low. In order for any upward momentum or a change on the time frame, change in the trend on the daily time frame, we would have need to bounce and then bounce up and form a higher high, and then form higher low and then continue upward. The 19th was a clear bear break, just meaning more downsides coming, and there would be no reason to buy in at that point. Now we could zoom in on we'll go to the 15-minute time frame. You might have been looking at the maybe you were looking at the 15-minute time frame for oversold. But you're right, it is, very oversold in the 15-minute time frame. So this is one of those situations where, if you're a day trader and you're playing these 5-minute oversold bounces, the 15-minute oversold bounces, you need to be extremely tight with your stop, and it takes a very skilled trader to do it, and it's very difficult because you want to be right, you want to make money, and it sucks to sell your position when things do not go your way. So I'm not sure if you were looking at buying into oversold conditions, but even if that was the case, even if you bought into these oversold 15-minute levels, you would have had a small little bounce and then come right back down and hopefully stop out for break even. But let's go back to the 19th. So here's the key level that we needed to hold, right? Actually, a little lower candle there. So we needed to hold that lower low. And we broke that on the 19th. Very clear break. And if anything, once you saw that break, on the daily time frame, you could zoom into the hourly or the 15-minute time frame and then say, okay, if we're going to change and see, we had a nice bear break, maybe that could have been a final flush and then we could have continued upward. In order to see upward continuation, we would need to see a trend change on the 15-minute time frame to initiate an hourly time frame trend change as well. So looking on the 20th, let's see, where's the 20th? Right here. Okay, so he's saying, what could we have bought, at the end of the day, the 20th, and what's the difference between end of day here? So there's a couple differences. I'm going to talk about them. Obviously, this dump was news related. It was based on Tim Cook, and to be honest, I don't follow Apple that closely, but I believe he came out and said that they're going to be not releasing as great of numbers or not great of sales or something to that effect that was portrayed extremely poorly. So this is more of a slow bleed situation. There would be no reason to jump in unless this shorter term 15-minute trend changes. And that's just a clear downtrend, right? So that trend actually changed right here. And I never nail the bottom. Few people rarely do. And if you always try to nail the bottom, you will likely not succeed most of the time. So in order for that trend to change, right, that 15-minute downtrend, here's where it changed. So we just formed these lower highs all the way down, and then boom, we surpassed this lower high and formed a higher high. Some brief sideways consolidation, and then another move up. This would have been the move right here. It's a small gains, but the risk is so minimal, and that's the really important thing. You don't want to make high-risk trades trying to catch a falling knife in a clear downtrend. So in regards to the January 3rd, it did get beat up as well. And it's, I do talk about bullish divergence with the RSI. However, since this is on the 15-minute time frame, it is a very zoomed-in view, and it doesn't always play out all the time. Obviously, in hindsight, it's much easier to see. If you tried to play RSI bounces on the 15-minute here, you would have gotten crushed in stops. I mean, it was just bleeding slowly, and it was not letting up. So it would have been very hard to play this. But over here, this is a little different of a situation. With the bad news, you're going to have maybe a dead cat bounce type of deal where you're going to see maybe a little more downside, but you're going to see a nice pop at some point. And then obviously looking at the RSI here, the 15-minute was extremely over, 15 RSI. That's extremely low. We come up a little bit. The price goes even lower, yet the RSI comes up a bit. So that's some bullish divergence. I would have been keeping an eye on that and possibly played a break of the high of this, or the break of this previous lower high. And again, the gains would have been very small, but the risk would have been mitigated tremendously, which is the most important thing for me. So looking, if we look on the hourly. So I hope that answered the question, Mario. That's one thing I would be looking for. Basically, I don't buy into securities when the trend is trending down. There's a downtrend. You're just trying to catch a falling knife or hoping that it bounces soon. You're going to have to zoom into specific time frames. Are you waiting for the hourly trend to change for the bounce to start, or maybe even the 15-minute trend, right? So the hourly is different. So if you look over here, just clear straight hourly downtrend, right? Just slow bleed all the way down. We got really oversold on the hourly. This would have been a nice bounce to play. So you zoom into the 15-minute. It's really choppy, with RSI being so low. There's no clear play. That would be a situation where you can set, you can zoom out a little bit, take a step back, and go to the hourly time frame, and then see when things are hourly oversold, and how often does this security bounce when it hits hourly oversold. We have been here where we just get a little bounce and then it keeps on going down, right? We get oversold again and then we just keep on, there's not like a clear, once it hits 30 RSI, we bounce up automatically. So this is where you kind of got to look back and see, when these things bounce. Ooh, another really good thing that I'm seeing. And again, this isn't 100%, but it is nice to see and make some money if this does happen. So with Apple here, I do see bullish divergence on the hourly time frame, which is another good thing. So the hourly time frame did get really beat up here. You can see RSI 13.56. That's really low. Come up a little bit, get some air, then we continue lower on that bad news. The price goes lower. Look at this. The RSI is not as oversold. So that means, in my opinion, a more longer term bounce could play out. We could see a nice hourly uptrend. Who knows how high it'll bounce, but that is a good sign in my opinion. However, if you want to zoom out and reduce the most risk, or if you're looking to enter on a long-term position, I zoom out to the daily time frame, and I wouldn't buy in until the daily trend changes. And yes, you could give up, tremendous gains to see that follow through, and it's going to take some patience because it will take time to happen. But in my opinion, the trend is your friend. We are on a clear daily downtrend. Until that trend changes, I would not initiate long positions. And the inverse is true as well. If we break that uptrend, I would sell my long positions. If you followed that rule where you sell based on a daily uptrend breaking, you would have saved. Let's see how much you would have saved. So on the break of the daily uptrend, in my opinion, would have been when this level broke. So initially, probably right over here, and we will see how much money we would have saved. 30%. You would have saved 31%. So you have 100 grand. You would have saved, it would have turned to like 70 grand today. You could have saved that 30%. Say, and say we start bouncing and the trend changes maybe up here in the 170 region. So if you bought in back around 170 and it goes back to the previous high, you just made 36%, right? So, say you cut your losses there, right? You have 100 grand down here, and then it comes up a little bit. You don't nail the bottom. You wait till that daily trend changes, and then you make over 30%. Now you're sitting on 130 grand instead of just back to your original 100. So, this is why following longer term trends can be important. But anyway, I'm rambling too much. The point of this is, if you're a longer term investor, I would wait till the daily trend changes. Some good signs, we're seeing daily oversold. Like you said, on the 20th, did we get daily? 20th is when we started to get daily oversold. And then the next day, we got even more oversold. So this is, a longer term multi-day bounce that played out. And then obviously that news came out and we came down again. RSI did not go as low on the daily, even though the price is lower. So these are these are some things to look at, and let's see how they play out. I'm definitely going to be touching on this as the days and weeks to come, and we'll see how it plays out. And if it does, I'll be like, great. I'm glad I found these indicators ahead of time. Would have been something to keep an eye on. And if it doesn't play out, that's okay. These things don't always play out, and that's why it's so important to have that stop level. So say this daily trend does change, right? We beat this lower high, so we come up. Then we consolidate, form a higher low, and then continue up. And you buy somewhere on that dip or that break of that previous high. And, we come up a little bit, and then we start to see, lower highs and lower lows. You have to have a tight stop level. You can't just hope for the moon, and because likely it won't happen. You have to be tight with this stuff. Oh, excuse me. So that's Apple. I do believe we're getting oversold on the weekly time frame, which is just more zoomed out, more conservative look on how the trend is going. And obviously we did break the weekly uptrend as well, which is okay. Looks like we're due for a bounce. And, in order for the weekly trend to change, we're going to have to see higher highs and higher lows. So it's all about looking at different time frames. How far do you want to zoom in, and having a plan. So Mario, I hope I answered your question. Let me know if you would like me to go into anything else. So that's Apple. Let's take a look at Facebook. I haven't looked at Facebook in a long time. And so weekly, is that weekly? Yeah, weekly oversold right here. And it looks like we're coming up a little bit on the cooled off the RSI a little bit, even though we're still trending down. Clear break in the weekly trend. It's a weekly downtrend. So in order for that to change, we have to form higher highs and higher lows, which could take a long time to play out. Daily time frame. So as you can see, looking at the daily level, once the RSI gets oversold at about 30 or just under 30, we usually do see a pop, right? Here was a very small pop, some sideways down action, then like a little bigger pop, and these aren't massive, gains, maybe 5, 6, 7%. But then, like right here's another one, oversold on the daily, popped a little bit up next few days. Again here, a little pop up, nice jump up, oversold here, nice jump up. It's the same thing with Apple. We're in a clear daily downtrend. Only reason that I would get curious in Facebook if I was a long-term investor is to buy when the daily trend changes, And my favorite example of this is when Dan from the Chart Guys, and I wasn't watching his videos all the way back when this happened, but he pointed it out in his later videos. They covered this, right? They covered this. I'm not sure how far back they went, but they were looking at this daily downtrend, right? So I'm going to zoom in. CGC, clear downtrend on the daily time frame. No reason to jump in, right? And then he made a point that once the daily trend changed, he started to get interested. And as you can see, that happened right here. So by no means did him and his fellow traders or investors or whatever, by no means did they nail that bottom and get a huge run, right? But I remember in the video, like one of the earliest videos of his that I saw, he said he was starting to talk to friends and family about entering in long-term positions because the daily trend has changed. And I mean, obviously it had, ridiculous upside from there. But so let's, you're not going to nail the bottom with the daily trend change, but let's say, so we break these higher, these lower highs, right? We broke them right here. Then we set this higher low. Maybe on anticipation of this higher low, you could even try to buy in on the consolidation, or even buying in on the break of this high right here. So let's say we bought in at 623. 623. I'm going to see how much, and obviously me personally, I would have not held, but 623. It's about, we'll call it 643 just because. 643. Okay, so I my mouse just dropped off. But so if you went to this level, right, previous high in January of 18, 433% gains based on buying in on the daily trend change. Now, obviously, the Canadian MJ sector is not your average sector. It had a ton of hype because of Canadian legalization and whatnot. So, not saying Apple's going to make these kind of gains. I'm just saying, the risk was significantly reduced by buying in on the daily trend change, and he didn't. They didn't buy in at the bottom, but I mean they saw very nice follow through. So back to Facebook. Pretty much that's it. I wouldn't be interested unless the daily trend changes. Let's look at AMZN. Have another buddy that he's relatively newer to trading, maybe 6 months or a year in. And it's great because he's getting interested in it. He sees the potential is there to make money. And, I think a lot of his friends in the office are all pumped up. They're all about Bitcoin, Ethereum, and didn't understand the technical aspect of reading the charts. And a lot of them are like that with Amazon too. But it's okay. So let's look at Amazon. Daily downtrend as well. So all I'd be looking for is a lower high in retrospect to this previous high and double top. So we'll see what happens. Yes, we were daily oversold when the S&P hit the bottom of their dump, and then Amazon's been going up ever since. In order to get a better idea of what's going on or when this lower high is going to happen on the daily time frame, we should zoom into the hourly time frame. And so when the hourly uptrend, so we're trending upwards, this is an hourly uptrend, right? Higher highs, higher lows. Whenever this hourly uptrend breaks and we start to have an hourly downtrend, that will mark the daily lower high. So all I'm looking for on Amazon is anything below 1778 is just a lower high on the daily time frame. Same situation with Facebook and Apple. I'd wait to buy on a daily uptrend change. What is Netflix? NFLX, yeah. Netflix, here we go. Ooh. So we did talk about the S&P changing its daily trend, which we'll have to see which of these FANG stocks change their trend on the daily, and Netflix is close. Wow. They are looking good. So I say this because, I mean, look at this, right? So we're, clear daily downtrend, right? So we, slightly broke that uptrend or the downtrend right here. We got higher highs, higher lows, boom, and then we broke it right here. So this stuff isn't, like it's not perfect, but in the long run, it'll serve you well. So Netflix, we're getting close to breaking this key level here. And notice, we broke all these previous, I wouldn't call these lower highs. Maybe I would. Maybe I'd call 280, 87 a lower high. So we clearly broke through that level, and we're testing 298.72 right now. If we break that, that will be very good. Some daily consolidation may be needed, and then we will need to continue upward. So maybe a good entry point would be on that daily consolidation, as long as we form a higher low compared to the 231 level. Netflix is looking good. That's actually shaping up better than I thought. Breaking up above the upper Bollinger Band. We typically tend to stay within the Bollinger Band, so some daily consolidation would be nice, and then to see more upside. Netflix is looking good. It's looking good. Let's see what the weekly looks like. Okay, so one thing to note. If we do break that key level that I was talking about on the daily time frame, we could run up to the middle Bollinger Band, and that could be the resistance level. Like, yes, we could break that key daily level, could run up into the middle Bollinger Band, and then see the daily consolidation, which would be completely okay. And then we could potentially get a weekly trend change on Netflix, which would be awesome. Let's see, Apple, Amazon, Facebook, Netflix. Yeah, that's pretty much it for those guys. So SPY, again, to reiterate, we're just looking for a lower high on the weekly time frame, but this daily trend does seem to be shaping up. Let's see how much it can go. Be protective with your stops. Do I predict that we're going to go back to the moon? Absolutely not. I literally base my trades on the technicals. Oh, speaking of technicals, I did find this guy that I watched a few weeks ago. I can't believe he only has 100 subscribers, but this content is awesome. I believe he has his own trading group, and he doesn't put out videos often at all. You can see this one's back from November. And, I mean, it's a long video, over an hour long. This guy knows his stuff, and it's awesome. I mean, the 100 moving out. He predicted... based on one of his Elliott wave scenarios that we were going to break down past the February lows, and obviously that happened. But he just really knows his stuff. And if anyone knows any other good Elliott wave analysis people, I would love to hear about them if you can drop them in the comments. But, yep, that's this guy, Godel Trades, Godel Trades. I wish he would put out more videos because this one was excellent. Okay, going on to oil. I do think I will be playing an oil position because this daily RSI bullish divergence is shaping up to be so clear. I really don't like playing UWT because it's scary to see my account go from extreme position to like extreme gain to extreme loss, which is not good. So on the daily time frame, we could just be setting up for another daily lower high, and anything under 52.93 would just be another daily lower high. So, we'd have to come up, consolidate a bit, form a higher low, and then punch through all this garbage right here. I do feel comfortable because of this bullish divergence, but we really need to see the bounce start to continue. So UWT is the leveraged ETF for oil. And, I mean, there's significant gains. You know, today closed at 1035, and if we got to that level that I was talking about, the next daily lower high, that's at 1515. That's almost 50% up. Throwing 100 grand, you got 50 grand profits if we hit that level. That's a big if, because if we came back down, obviously, you know, lose a substantial amount of money. So, you know, just be cautious with these. USO is another ETF for oil. It's not leveraged, so less risk. But, yeah, you know, could be a good one to play. And let's see. I know UNG. Natural gas. So natural gas has been getting pretty beat up. Actually, 1 second, I think. Nat gas. Yep. Is that it? Okay, here's Nat Gas USD. So, very beat up. UNG is just an ETF for natural gas. I did see Dan is actually going to be entering a swing position, which gets me excited. He's very good with the technicals, and when he, you know, initiates positions, he usually does a good job, and like I feel like he definitely keeps a tight stop, so that's always there. He's probably very good with that. But, you know, we're likely to see a daily bounce at least a little bit. So that could be something I might look into with UNG. And not just because Dan's doing it. And it's important to not follow people's trades just because they're making the trade. You know, have your own plan, have your own stops. You know, what are you looking for in the trade? Right, so I mean, I still have to establish that myself if I'm going to zoom into the hourly time frame and maybe buy on some consolidation and then wait for, you know, continuation up. But anyway, natural gas is getting beat up. Something to look at. And yeah, let's don't look at gold too often. Oh, we're on the hourly time frame. Let's look at the daily time frame. Geez, nice daily trend change for gold. So again, you know, good example of a daily trend change. Clear downtrend, daily downtrend, no reason to buy in. Then we start to get some sideways action, right? Here is where we break the key levels. And, you know, yes, we did come back down, but look, it's a higher low. And we saw continuation. So if you bought on this break right here at about 12.18, you know, which isn't perfect, but you'd be up significantly depending on what you're buying, right? So gold's currently at 12.84. Yeah, so that's I did point out, looks like gold is in a very long-term equilibrium. I think I was looking at the monthly. Yeah, very long-term equilibrium. So we'll see how that plays out. But I think that's pretty much it. If you guys have any questions, please comment. I would love to address people's questions, maybe get some different points of view. I know one guy, Modern Picasso, he does very good work on Twitter. You know, if you guys want to check out his stuff, just look up Modern Picasso on Twitter, and yeah, he's right here, this guy. I really wish he would put out some videos because I think he's very knowledgeable in what he does, and I'm sure a lot of people would gain value out of that. But anyway, guys, yep, that's it. Please subscribe if you have not. I try to do daily videos, and that's pretty much it. Thank you for watching.